All right. Good morning. How are you? Comment allez-vous? All right. Welcome to Forex.Today, the YouTube community. Almost 20,000 foreign exchange traders gather here today to conduct technical and fundamental analysis with the overriding goal of me giving examples on how to put together trade plans. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao ma! Hey. My name is Wayne McDonald. I will be your guide on this thing we call Forex. Ask questions, get involved. I will do my best to help. Technical analysis, fundamental analysis, trader psychology is all fair games. Just let me know. Ask in the chat below, and I will do my best to get to it. And if I don't get to it, I'd say, 40% of the community here at Forex.Today have been members of FX Bootcamp for 5, 10, even 15 years. So if I can't get to it, maybe they'll help. And if they can't help, maybe become a subscriber of Forex.Today and ask me tomorrow and see if I can help. But just remember, there's a lot of questions coming through. Probably takes you less than a minute to ask the question, and often it takes me 20 or 30 minutes to answer it appropriately so that you actually know not just the answer, but how I got to that conclusion. So anyways, I've been doing these live streams now for almost 20 years. So if I can't get to today, maybe tomorrow, maybe next week, maybe next month, maybe next quarter, maybe next year, maybe next decade. So subscribe, huh? All right, cool. So if you look in the description below the video, you'll have a link to my book, Strategic and Tactical Forex Trading. Maybe that you might find that helpful. If you look at the description below the video, you will also see a link to free trading videos, youtube.com/fxbootcamp. There's a playlist there of 4 different videos. They're about 25 minutes each. And they focus on technical analysis, moving averages, Fibonacci, pivot points, oscillators, that kind of thing. So you might find that helpful, and it's free. Cool. Also in the description below is a link to fxbootcamp.com. It's $88 per year, 65 hours of foreign exchange trading videos, swing trading, day trading, monetary policy, macroeconomics, taking control of your trading, all kinds of deep dives and like multiple training courses on technical analysis. Holy smokes, $88 a year. Great. And maybe you want to upgrade that account and join one of my live trading groups. That's up to you. And of course, in the description below the video is a link to tradersway.com. A trustworthy, ethical broker that has fast execution speeds, narrow spreads, big swaps, all the things that you want in a foreign exchange trader or foreign exchange brokerage firm. It all sounds pretty logical and simple. Like you might say, well, don't they all have those things? And the answer is no. So I recommend them. They earn my loyalty and respect. Maybe visit tradersway.com, open up a demo, and see if they can earn your loyalty and respect too. So let's get on with it. What's up? Okay, love that yen. Whoop. Yeah, whoop. Love that yen. Yeah, it's all good. Yeah, okay, so let's take a look. We can go to the calendar. Bum, 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 dun, 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 dun. Okay, cool. Have you read the RBA statement yet? Okay, could be important. Okay, Wednesday. Import-export data out of China. Very important. Imports and exports, and then you get balance. Cool. Why is this important to a foreign exchange trader? Because it shows the supply and demand of money and the direction of that money. And if money crosses a border, the value changes. It's what we do. So, I would say that's pretty important today. Tomorrow's information has to do with the value of the euro. Two things are expected to happen tomorrow. One, the end of bond purchases. And two, well, this whole thing about are they going to raise interest rates? Probably not tomorrow, but maybe in July. So that'll be interesting. And of course, if you think in the next 8 weeks they're going to raise interest rates, then you could start maybe buying now. Okay. I don't know. Your call. One thing to watch directionally is the U.S. stock market, tradersway.com. Click on that empty web and then flip it over to MT5. And that's how you watch the stock market. So again, it's been mostly down and then has stabilized and is trying to head up. But really it comes down to, day by day, obviously. Up days are days when some currencies weaken, and down days, those same weakened currencies would then strengthen. So it gives you direction day by day, risk on or risk off. But of course, the bigger question lies in where are we going to be down the road, not just today and tomorrow, but next week, next month, and the rest of the year. And of course, this is the price discovery going on now. Will there be some up, or is it more likely to head back down? Okay. If it's heading back down to a bottom, or even lower than even lower than the bottom we've printed, the second leg will occur for much different reasons. The first leg down, okay, down legs, okay, for the stock market. One is interest rates going up, so that impacts valuations. Okay. Compression of multiples. And then, so that's the first one. So the interest rates go up. It changed the value based on models. Okay. You can do the present value calculations, or you can do CAPM calculations, capital asset pricing model. Okay. These are pretty simple things. We can go over them if you need. But two, the second leg down has nothing to do with the first one because the first one's already happened. The second one would be a recession. And what that impacts really is earnings. So if there's a recession, maybe you don't buy last year's Samsung, which we call iPhones. Sorry, did that hurt? Oh, Wayne, that hurt. Anywho, earnings, because if there's a recession, maybe you don't spend $1,000 on a phone. Maybe you hold on to it for a year and see how things go. So anyways, so if earnings fall because of recession, then it's a different part of these models where you say, well, the present value of falling earnings is lower. See, the present value of, let's say, higher interest rates or higher levels of inflation lowers the present value, but then less cash flow in the future lowers today's value of that company. So that would be a whole second leg, and that would be your either your lower low or your double bottom. Very plausibly another lower low. Okay? Very plausible. Let's say by the end of summer, why not be down here? Is that impossible, you think? I wouldn't rule it out. I'm not making that call, but I'm like, that is plausible. That should be part of your modeling, right? That should be part of your modeling. Your models try to predict the future. Now remember, all models are wrong, but sometimes they're useful. So do you have your best case, worst case, and base case? That's a B, by the way. There you go. Have you done all that? Then you can say, well, as long as we, oh my God, and if it falls, then you're like, okay, maybe it's the worst case. We don't really know. Okay. So anyways, if you want to use this, just go to tradersway.com, click on MT Web. Birthdays is the worst days. All right. Let me ask you something. Did anything fundamentally interesting happen in the last 24 hours? Yeah, Thiago, up to 43 and then down to 38. But we kind of talked about that in November, right? November, December, January. I outlined all that. And so now it's like, it's probably not that far off. I'm not trying to say I'm right. That's not the point. The point is you can model these things. Yeah, and it's not Canada Day yet. Yeah. Okay. Has anything interesting happened in the last 48 hours? Something that maybe you should be reviewing. Something that might impact the currency markets. Oh, Peter. Come on, Peter. You should know it's a loaded question. Why would I ask the question if the answer is no? Ted's dollar weakness. That's not fundamental. That could just be market. That could be a response to the fundamental, but that's not it. But that happened on Monday. What about in the last 24 hours? It's Wednesday. Something that you should research and read. Something that could be helpful. IMF. Yeah, Peter. Yeah. The OECD. Yeah. Oh, let me just kill all those. All right. The Organization of Economic Something Development, blah. Oh, what does that stand for again? The Organization of it's this organization of rich countries. Economic Developed. I can't remember what the hell it's called. Anyways, OECD, rich countries. Okay. They came out with a report. Oh my God. When was June 8th? Is that today? Uh-huh. Economic Outlook by the OECD. Yeah, it's an important piece of news. Okay. Annual GDP growth projections for every country. Oh my God. Don't look at it. Cooperation and development. Thank you. Thanks, Jay. You're right. Organization of Economic Cooperation and Development. So if you look at these countries, rich, except for a couple. Anyways. Yeah. So I'll give you the link. I'll be a kind mentor today. I'm in a good mood. I've been up for hours and hours and hours and hours and hours and hours. But it'll be up to you. Are you going to read it? Are you going to watch it? Are you going to think about it? Are you going to update your models? So on and so forth. But is that an important publication? Uh-huh. Because they include the price of war. Okay. Look how pretty. Look how pretty. Latest CPI news release. Wonderful. Inflation in OECD areas hit 9.2. Holy snap. But not Japan. So how do you use this? Let's just do some basic stuff. Let's do some basic stuff. Let me move over. Oh, and I'll do oil and production. Okay, hang on. I want you to think about this. Open up your USD yen chart and say, okay, United States is way, 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 way up. And Japan is way, 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 way down. Okay. And that's been since the beginning of 2021. And now look at your USD yen chart and see what you see. And then you're like, oh my God, that might, yep. And then you might start to see things like the rationale of correlation. Okay. Come on, give me some Forex love. Will you click the like button? That's cool stuff, right? Like reports, think of it this way. There are organizations and institutions out there that hire quants and hire PhDs to gather data from all over the world, crunch it, analyze it, and then report it for you so you don't have to hire a quant or hire a PhD. You get it for free. And they do things like explain productivity and growth, interest rates and inflation. And then they put these all cool little graphs together and you can say, USD yen up. Also, I want you to think about it. Let's just say 95% of retail traders lose their money. And I'd say at least 95% of retail Forex traders don't look at stuff like this. Is it directly related? No, I don't know if it's directly related, but there is some sort of relationship. So the way I looked at it when I first started trading Forex is like, I don't know what any of this crap means, but if the activity of seeking this information, reading it, and thinking about it might give me the edge to be the top 5% instead of the bottom 95%, then I'm willing to do it. Even if it doesn't help in the beginning, maybe I'll find the edge. I'll find the alpha. I'll become the foreign exchange trader I want to be. I'm sorry to hear that, Peter. That actually happened to friends of mine on the weekend. They lost their pet. So, I'm sorry to hear that. My condolences. Okay. One last thing, and then we'll move on.com. This is a sales pitch. I'm putting together a training course called Learn How to Trade Oil. And we're actively working on it. I've hired a PhD to work for me. He's helped me in the macroeconomics class as well. And right now we're working on sort of the basics, and then we'll do a deeper dive. But if you ever wondered about unconventional gas production versus conventional gas production, we're already working on, the stratosphere. Anyways, we're working on teaching the difference between, conventional oil, if you think about a traditional oil. When I think of, or when you think of an oil well, you might think of, you drill down and all of a sudden oil starts, spraying up into the sky and you're like, oh, we got a gusher. Well, that doesn't actually really happen anyways, right? So, and then of course things have changed over the years, and there's new ways of creating this production of oil and gas. Anyway, so I'm working on the process of teaching that, and then you're like, okay, so here by the time you get to this slide, you've already learned conventional oil drilling, and then you find out the limitations of that, and then you find out what's kind of happening now, where you have to go to tighter levels of oil and gas, how that works, and then we go really through the actual technology of the well and going into the shale and how it gets fracked and stuff like that. Right, and if you want to learn about oil sands, which is a different form of tight oil, unconventional, and how that works and the process and how you do it, and man, we're going to go over all of that. Right? How does Canada and Venezuela get oil out of sand? And how does the United States get oil out of shale? How are they similar? How are they different? And why do you need to do it? So, so it's that level of preparation that I want to lead us all through this summer. So that, yes, I'm actually going to teach you how to trade an oil chart, but I want you to understand the entire oil industry. So when I took a class on oil at Harvard, my professor was a PhD from Oxford. So she was a visiting professor, and she was Russian, and her PhD was in oil production. So it was a great start. And in the very first class, she assigned reading that was pretty close to 4,000 pages. Pretty amazing. And I had to write more than 12 papers. And the final exam was 2 different papers. And to me, that's just scratching the surface. I want to do much deeper dives. So you'll learn things like the overview of the entire industry of oil and gas, but I'm going to put together things like, upstream, midstream, downstream, going through different types of legal contracts, so on and so forth, where oil is, how you find it, how you get it out of the ground, how you move it around, how it gets sold, how do you turn crude oil into jet fuel and gasoline, and what do you do with the nat gas, and literally go through the hardware. What does this piece of equipment do? And then where does that pipe go? And it goes to this other piece of equipment. What does it do and how does it work? And then this goes up and this goes down and this comes out and then this goes to another piece of equipment. What does it do? Okay. So all of that and so much more. And then we'll go into the time of day I trade, what I trade, when I trade, the correlation of these things. How does this impact macroeconomics? We're going to go through like pipelines versus LNG ships and all kinds of things. And probably even I wrote a paper again at Harvard about the change in direction of oil leaving the Middle East and going to China. So from the Chinese point of view and from the oil industry point of view, I talked in the paper, and I think I even named it, the far, instead of the Middle East, it'll be like the Middle West or the Far West relative to China, where oil. And so how does this all work? And how does this impact countries like Japan? And especially after the earthquake, Japan took down all their nuclear power plants. And so what did they get? They needed LNG. And because you can't just build a pipeline from Nigeria to Japan quickly, right? So I'm going to try to cover my ambitious goal for the summer is not just cover the entire history, but go through the actual nuts and bolts of finding oil, getting it out of the ground, getting it to a refinery, turning that into a product, selling it, and then how does this all get traded and hedged in the markets? So if you ever wondered how WTI gets cracked at a refinery and turned into jet fuel, we're going to cover that. If you ever wondered if somebody found oil on your land, what the contract is going to be like, we're going to cover that. Isn't that interesting? So stay tuned. It'll be for members of FX Bootcamp. There will be a fee for it, but it's summer school, man. You're going to, by the time September hits, you'll be a little bit smarter than you used to be. I think it's cool, and I'm excited about it. So hopefully you are too. And then, therefore, you can end up trading it. So when you're going through OPEC, when you're going through the EIA or IEA, you know what they're talking about. You know how to fundamentally analyze this data, set up a fundamental bias for WTI and Brent, and be able to trade it. You will know more about the energy complex than 99% of people on Earth. And you'll be able to trade it and make money is the goal. So, cool, huh? And we're basically done the first lecture, which is the broad overview, and then it's going to get deeper and deeper and dive. I'm even trying to set up the possibility for me to fly up to the oil sands in Canada to a fracking site, and I'm going to make some phone calls and see if I can visit some oil wells in Texas. It'd be cool to get a tour of a refinery. I don't know people at a refinery, but I know people that probably know people at a refinery. And then I thought, wouldn't it be really cool if I can travel to the Middle East, it'd be cool to visit a production site and a refinery site out there as well. Oh, although I don't even know if there's refinery sites in like, for example, if you're in Saudi Arabia driving your Mercedes S-Class, your gasoline came from the United States, but the oil came from Saudi Arabia, which means the oil left Saudi Arabia, came to the United States, got turned into gasoline, and then went back to Saudi Arabia. You think there's politics involved with oil? Hey, man, World War I and World War II was about oil, just by the way. Okay? And by the way, also, you might think Rockefeller, at one point, Rockefeller was the richest person in the world. And in many ways it still is, even though he's been dead all these years. The best thing that ever happened to Rockefeller was the Civil War. Why? Because the North conscripted all the whale ships, the whaling ships. They used it for the war. They used them for the war. So what happened to whale oil that was used in lamps? Suddenly New York City went dark because nobody had whale oil anymore. So what did they use instead when whale oil ran dry right at the beginning of the US Civil War? Kerosene. And by the way, drives me nuts. People always say, Rockefeller was an oil man. No, he wasn't. He bought oil, cracked it, and created a product from it. So he refined it into kerosene. And the Standard Oil Company, it wasn't about oil the way you're thinking about it. It's kerosene oil. It's lamp oil. Then what? Tesla and JP Morgan got together, created electricity, and started lighting up light bulbs. Okay. Okay. So anyways, how many people here are interested in doing summer school? Okay. Yep. Okay. Cool. That's a good start. Yep, that's good. Good. And it'll be less than $10,000, I promise you. It'll be less than $5,000. It'll be less than $2,000, less than $1,000. Yeah. Right, Barry? All right, cool. Sorry for the sales pitch, but look, I'm working on it, and it's awesome. That's all I can tell you. All right. But wait, there's more. But just imagine, though, like, people bring up, fracking. You're like, oh, well, I know a lot about fracking. And you could sit down and explain how fracking works. Cool. All right, gold. Still stuck in the mud. I don't know if you want to trade it, buy it, and just hold it. Maybe it's just some sort of asset you want in your portfolio. But it's just farting around. The bottom, the most recent bottom is 18. And by the way, that makes sense based on annual pivot points. We've already done the whole full Monty. Well, it's not really a full Monty, but the yearly trade was around 1770 to a projected high of just around 2000, maybe as high as 2100. And we already did all of that this year. It came all the way back down and basically reset and is somewhat neutral. You got to be careful, though, because if dollar gets strong and gold stays neutral, down, 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 down. Now, the interesting part of gold, of course, is it's your grandfather used it to hedge inflation, maybe even your papa, but it doesn't seem to be quite the same right now. Okay? Because down here when it rallied, we didn't have inflation, and now that we have inflation, it ain't doing nothing. But maybe nothing is better than volatility. But then you could argue that from here to here and all the way back down is volatility. So imagine those that freaked out and bought gold up here to hedge their inflation, and it did the opposite. Imagine that. You know somebody did it, right? Somewhere there or there. Okay, especially when you look at this level here. Somebody said, you know what? I think it's going to go to 3,000. So I'm going to buy it here and hedge my inflation risk. And it deflated. And it hurt more than it helped. And you're like, oh, snap. But anyways. Lottie-dottie. We likes to party. We don't cause trouble, and we don't bother nobody, cuz. All right. So anyways, that's that. Take a look. Let's do the indices here. Euro strong. Does this have anything to do with the interest rate decision tomorrow? Oh, I don't know. Could be a rabbit. Could be. How about the yen? Okay. The day trading group has been selling the yen for days and days and days. And the other thing we've been selling for days and days and days is Swiss franc. Cool. But while the dollar was weak, the day trading group and the swing trading group was preparing for what I would, not fundamentally arguable that it needed to find some strength. At least there was rationale of not weakness, not weakness. And we covered it over and over and over and over and over again. It's simply directional. And you're like, what do you mean by that? The flow of money, cash flow, global macroeconomics suggested that, okay, it's been weak, but it should be strong. And now it's strong. Even despite the yen being weak, despite the Swiss franc being weak. What I mean by this, normally, if you looked at this 2 years ago, 4 years ago, 8 years ago, 10 years ago, 20 years ago, most likely even 30 years ago, in a scenario like what we're looking at now, which is Swissy down, yen down, you would argue dollar should be down. The only thing is we were prepared for this, we were prepared for this, but we were also prepared for that. And normally it doesn't make sense, but that's the point. This ain't normal. There's something broken. And that's what I had been talking about for, days and days and days and days and days. And all of a sudden the dollar just, boom, got strong while the others remained weak. Is that important information to have? I don't know. That's for you to decide. Okay. Cool. So anyways, euro going up. Again, probably the end of bond purchases and soon interest rate hikes. Aussie going up probably has to do with China. Therefore, you might want to look at not just the import-export data. That's too obvious. You need to drill down inside the subcomponents of balance of trade and figure out the future. We're not interested in past. Who cares about import? Who thinks export data is going to be good out of China if all the factories have been closed? I'm like, dude, that's not the point. The point is predict the future. Okay? Kitty CAD, yeah, oil's only up a bajillion %. Why would CAD be strong? Of course it's going to be strong. Okay? And anyways, and that Kiwi. Today's Wednesday, right? So what happened yesterday? Okay. You guys watching dairy auction? The dairy auction was yesterday. Uh-huh. We're down here. We were up here, now we're down here. We were up there, now we're down here. We were up there, now we're down here. Huh. So Kiwi giving a little back in the last 24 hours. Could it be because of that? Could be a rabbit, could be. Right? Euro Aussie? Yeah. That was one I talked about a couple of days ago. The problem is, of course, is they're both strong. So I kind of shied away from that one. The one I pointed out, Savi, was pound Aussie, but I was wrong on the pound. I was wrong on that one. Hey, man, happens. I was wrong. I thought the pound would weaken. Then I guess keeping the prime minister was good news, and the market reacted to it, maybe overreacted, and now we go back to what we were doing. You might argue that the strength was sort of like dumb strength, and now we need to go back into sort of a prevailing trend. Okay, let's statistically analyze this. The mean, the slope of the mean, the variance of the mean, and the square root of the variance of the mean, and you get something like this. And so you say, okay, yeah, all right, there was a Boris Johnson thing and it could have been worse. So anyway, so not having to replace the prime minister is good news because then it averts uncertainty. But then we get past that and we're like, wait, what? Regardless of the prime minister, the economy sucks. And so maybe we start going back around. I don't know. You guys remember all of this? The mean, right? The slope of the mean, the variance from the mean, and the square root of the variance. Okay, that's what all of this is. And there, of course, you're going to, how do you calculate all of that, right? Y equals mx plus b. So you create, okay, and you got your X and Y axes, okay? M is the slope of the mean, and B is the intercept. So M is going to be rise over run. Just simply, if it's a negative rise, it's like, it's a fall over time. Cool. So anyways, you can analyze your pig and say, all right, it's been up for the last couple of days. Now it's going to be down for the next 3 weeks. You could. Okay. Thiago, sell pound CAD. See, that makes sense, right? Makes sense. The timing might be off, but fundamentally it makes sense. And that's where models are helpful. Where you say, okay, CAD is strong and I understand why. Pound is strong and I understand why, but I think the trend in the CAD is long-term and the uptrend in the pound is short-term. So when I see potential weakness in the pound, the weakness should be long-term. I connect the two, I take the shot, I drop the stop, and I take a walk, come back in a month and see how many pips I've made. Huh? Oh my God. Do you guys love this stuff? Do you stay up to midnight trading and then wake up at 4:44 in the morning and pick up where you left off? Uh-huh. Yep. Peter's like, yep. Yeah. Yeah, awesome, Blossom. So anyways, let's try to connect some of these dots. Let's go out to Yen Yen. Oh my gourd. Yep. Okay. Oh my gourd. Oh my gourd. Oh my God, Becky. Oh my God, Becky. Okay, cool. So we are flying to a danger zone. Uh-huh. Okay. There's two things. Thank you, Denise. All right. All right. So there's a conflict here. There's a current this way and a current this way. And we're just approaching the choppiness. Okay. So we have this up. Oops. If I can get my mouse to work. Okay. Up, down, up, down, up, down, up, down, up. Will there be a down? Uh-huh. However, this zone here says stop buying. And this area here says stop buying. Okay. Now, is it something you should respect? In general, yes, I think you should, because it's a tool you're using. So if you're not going to respect the tool, then don't use the tool. Get rid of it. Delete it. But how do you think past the math? How do you think past the indicator? Well, to understand the indicator, you have to understand the math. And what is it saying? Based on last month. Okay? So you look at Aussie yen and you say, well, this is what happened last month. Okay? Is it the same as this month? Maybe they're dissimilar. And if so, if this month is not the same as last month, what does it all mean, Basel? Okay? And what it could suggest is not R2, instead R3. Now, how do you know that? That's alpha. I don't know how I know. I analyzed it and I made a decision. Okay? So maybe. Not saying that's it. But what I am saying faux show, what's not a maybe, is using weekly and monthly, no matter how you want to slice and dice it, this area here is a danger zone. Okay? So caution, caution, caution. Shields up, red alert. Shields up. Red alert. Delta attack formation, Commander Wolf. Does anyone know that one? All right. CAD yen, very much the same, although we've blown through the doors. And what are we approaching? I actually talked about this 48 hours ago. And yes, this actually makes sense. See where we are now? It's actually like this. Meep, 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 meep. Shields up, red alert, daily, weekly, monthly. Be careful. Right? Come on, man. Denise is not Star Wars, Star Trek. Okay? Look at this. Monthly R3, weekly R2. This is where I discussed an Arctic turtle a couple of days ago. Now we're here. Don't be shocked. Now, again, I don't know what's going to happen, but I know there's a probability change. It's like counting cards. I don't know if a king's going to come up next, but I know there's a 12% chance. Do I bet? 12% might not be good enough. If we've gone through much of the deck and I've seen many of the cards, what if I thought there was a 37% chance? It might change my behavior. I don't know what the next card is, but the probabilities have changed, and I might analyze that and say in this situation that's quite favorable. Okay? I have a king. There's a king on the table. There's only 2 more kings. This person's betting light. This person's betting light. This one's pushing a little bit. Do they have a king? Do they have a pair of kings too? Just like me. Okay, I'm going to play it like they have a king. I have a king. What's my next high card? Do I have an 8? A 10? An ace? Oh, I have an ace high card. Probably beating this person. What's the chance there's another ace? What's the chance there's another king? And of course, if they have 3 kings, they're going to go all in. And I have 3 kings and an ace kicker. I want them to feel they're going to win. Ooh, you bet big. Ooh, I have to think about this. Okay? And so you're trying to figure out the probabilities. And then, of course, you think you're the smart one. You're like, ha, ha, ha. But maybe they have 2 kings in their hand and 1 on the table. And I have the last king. Nah, I didn't say that. Of course, does it? Yeah. So anyways. Whew. 3 kings beats 2 kings and an ace kicker. Anywho, what are the probabilities? And you're like, oh, the probability of that guy holding that 2 kings on a deal? He was dealt 2 kings? Oh, you son of a... Well, there was only a 2% chance of that, and I lost. So anyways, probability, man. Probability. Probably. So anyways, yens are weak. Are you buying dips? You got to be cautious here because it's a fine line. You want a continuation. Okay? I'm not saying it won't continue to go up. I'm saying the probabilities have changed. So you kind of want to either ignore it and let it make the higher high and catch the next one, which is fine. But most importantly, if it does this, is that important? Oh my gosh. Dude, is that important? Uh-huh. Anurag says, hey, should I take profit on... Dude, I don't answer questions like that. Talk to your lawyer, your bartender, or a priest. Okay? That's your alpha. Okay? Will you be able to get to your target? How the hell would I know? I have no idea. Okay? But I face the same questions as you all day, every day. Okay? You will need to make a decision. But I'm certainly not going to make that decision for you. Okay? Unless you got $5 million and you want to pay me 30% of the profits. Then we can talk. Then I'll make decisions. All right. You guys want to do Swissy? Sure. Let's do some Swissy. Okay. Cool. CAD Swissy. There it is. Anurag says, should I take profit or will it go higher? I have no idea. How would I know that? I can tell you that if you're day trading this and your entry was around 76 using daily pivots, that's your aggressive target. Can you get to 77? Well, that's what the daily pivots suggest. So if you were day trading, okay, it's actually more of a swing trade, but is that possible? Yeah, that's possible. Sure. Will it do it? I don't know. I don't know the future. You got to be careful with someone that tells you they know the future. I know I can analyze data and make assumptions, and from that create a bias, but at what time and what price? Well, that's what we're trying to figure out. That's what this chart is telling us. There's the price analysis. There's the time analysis. And so we're trying to say, do you have a rationale for CAD going up? Yes. Do you have a rationale for the Swissy weakening? Yes. Is the CAD going to go up in the next 1 hour? And will the Swissy go down in the next 1 hour? Ooh, well, I mean, maybe. You'd have to analyze that and drop into smaller time frames. Okay? But I would ask you, Anurag, right? If you bought it here, why? And you might just say, well, it's a higher low. Well, then you don't know when to get out. If you don't know why you got in, you don't know why to get out. And I would invite you to maybe learn some, other trading techniques to try to answer those types of questions. Why did you buy it? So you might have bought it for a much different reason. You might have bought it because of this. Well, then you're not scared of this, are you? Well, maybe, because it might consolidate. So are you neutral in your fundamental analysis for CAD Swissy? And you might say, no, Wayne, I'm not neutral. I'm bullish. Okay, well then what? Well, then there must be a higher high somewhere in the future of this thing. So maybe you're thinking higher high, and then tomorrow higher low, and then the day after tomorrow higher high again. Cool. But will it do it? I don't know. What do you think? Okay. And that's where you got to get there. And so you use tools to analyze this. Okay. If it's going to go up, what would I want to look at? I got price action. I get pivot points. I can change. So let's say I'm bullish. I'll look at a daily confluence like this, right? Actually, this one is the one I wanted. There we go. And I zoom in. I'm like, okay, what do I know? Talk to me, Goose. Whoa, dude, another Top Gun reference. All right. What do we know? The bottom's kind of in here, and that would imply that. Actually, not quite. Because this is the low, it predicts that. Okay, so based on pivot point theory, not prediction of the future, what do the pivot points tell me on a longer term basis? We can probably get to 79. By the way, I covered this 2 or 3 days ago in the day trading group. You might want to join. We literally talked about 79. All right, cool. So anyways, all right, so that's plausible or possible. What does it say, right? So we'll mark this. Maybe, and that, by the way, not an all-time high. That's just, if this is your bottom, that is your projected top. It's just a projection. Okay, that's what the monthlies say. But it can go up for 4 months. That's just June. Okay, June conservative high, 79. Okay, what else is going on here? Okay, we look at this as a low, and you're like, well, that's the weekly target here, which was weekly R1, monthly R1. And we seem to have hit it and gone through, so that's bullish. All right, so that gets us, well, if it's that bullish and we're breaching weekly R2, monthly R1, there are some real bulls here. So maybe we're looking at plausibly 80 before profit taking. Cool. Should we worry about this? Oh, yeah. But this week? Maybe not this week. So what would work for this week? Well, maybe we're setting up for a big pullback back to the 4-hour 21. And then next week, attack 80. So should I worry about this week? Well, if you see it, you should incorporate that into your analysis. And you're like, well, that's real. And then buying a dip might be real. Or all of this fails. The stock market in the United States starts falling because there's real concerns about recession. And this could even be impacted by the ECB and stuff, right? Where suddenly the ECB doesn't do anything like what we think they're going to do. And money flows to Switzerland and the world freaks out and you got one of these things going on. You need to adjust. What is the possibility the ECB disappoints tomorrow? They're like, okay, we're going to cut bond purchases, but we're not ready for interest rate hikes. Oh my God, money goes back to Switzerland. Swissy gets strong. And son of a biatch, your beautiful cat Swissy falls. What's the probability of the ECB disappointing? One analyst said, the ECB has never missed an opportunity to miss an opportunity. It's very high that they disappoint. So, should you incorporate that into your model, into your thought processes? That's what the Wayne do. Okay. So, should I be careful? Yeah, we call this, okay, market resistance. This is market resistance. Okay. This whole area here, monthly and weekly. So I'm going to call this zone here market. Okay. All of that is based on what the market did in the past. Okay. Now to highlight this other one, you take this and you drag that across. And what do you have that? That has nothing to do with the market per se. They're similar but different. And this is price resistance. And now we're facing, currently, right now, a confluence of price and market resistance. Does it mean CAD Swissy is going to fall? No. Does it mean the probability of at least a significant retracement is higher now than it was 2 days ago when we were down here? Oh, faux show. And it's the thought process I'm trying to teach you. Denise says, technical seem broke right now because of the yen. Well, you need to study yield curve control at the Bank of Japan. Also, you might want to look at that OECD release that came out today and compare their analysis of USA versus Japan and see if there's a relationship, a longer term relationship in this direction. Okay. And then, of course, when analyzing the USA, right, you want to look at maybe S&P 500 for risk on, risk off. And, right, or X minus M. And of course, on both of these, the difference, the change. Cool. And that's it. I'm spent. I'm done. I'm tired. Or was up early. I've already meditated. I went for a walk. I traded. I did analysis. I spent time with my children. I went for a drive. I've already had a cappuccino. I've already had a cigar. And yeah, so far it's been a pretty good morning. But the most important thing is that you and I were able to spend time together. And I think we do good things, right, Sophie? Together, as a community of foreign exchange traders, I think we make the world a better place. I like you in my world, so thank you for being a subscriber of Forex.Today and perhaps even a member of FX Bootcamp. If you want to do the oil course with me, the bare minimum is you have to be a member of FX Bootcamp, a whopping $88 a year. And there will be a fee for this special summer school. Of course, it takes time, takes money. I've hired a PhD, all that kind of stuff. But it's not going to be ridiculous. So maybe join FX Bootcamp and tradersway.com. So without further ado, peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful day. I'll see you later. If you're in my day trading group, I'll see you tonight for the pre-Asia Open. Adios. Ciao. That just happened.